you may have noticed it, it's getting harder and harder to stretch a dollar.
It sure is. New numbers out today show consumer prices were 9.1% higher than last year. U.S. inflation hit a 40-year high last month, driven by record gas prices plus certain food items that skyrocketed in price, including margarine that was up 34% compared to a year ago, and egg prices up 33%. But gas prices increased the most, up 59% from a year ago.
To talk about today's inflation report, we're now joined by Sumner Lacroix, a professor with the University of Hawaii Economics Research Organization, UHERO. Thank you so much for joining us tonight. Consumer inflation up 9.1% from last year. Did that number surprise you?
No, it didn't. It's been consistent with other inflation numbers in recent months. I think that the increase in energy prices is what's driving a lot of it. If you take the energy prices out, the number would be lower. And the energy price increases are being driven by the war in Ukraine. They're pushing up oil prices around the world. That was the primary force behind the number. You know, and the good news here is that oil prices have already started to come down from their heights. At their height, they're at about $120, and they've now gone down to under 100. That'll be reflected in prices at the pump in later July, August, early September. So I think we're going to see some of these inflation numbers moderate over the next couple months in the price reports. The bad news is that the underlying core inflation rate is about 6%. That's a really high number for the Federal Reserve Board that's in charge of monitoring and trying to control inflation. They typically aim for 2%. And the last thing that they want to see is that a core inflation rate of 6% starts to become embedded in people's expectations. The problem with that is it can lead to a wage cost spiral where people start to say, if inflation is 6%, then my wage needs to rise by at least 6%, maybe 7, 8, 9%. And then that increased cost from paying people higher wages can lead to more inflation. So that's the danger. And that's why I think the Fed has already taken some pretty stiff action and is prepared to take more.
6, 7, 8, 9, it all still hurts, right? When you pay more.
It all still hurts. You know, I mean, right now wages have been increasing in the United States and also here in Hawaii, but they're not increasing anywhere near the rate of inflation. And so what many people are finding is that their real purchasing power is falling. Wages are increasing, but prices are increasing faster. So they have to cut back in various places. That makes it rough, particularly for lower income families. Where there's less elasticity in the spending. There's more of the goods purchased are really essential goods where it's hard to cut back. You're cutting back on essentials. For upper income families, there's a little more of a cushion.
And Sumner, you know, what should businesses do if, you know, they have services, they sell items in more of the nice to have category than the need to have? I think one of the things that businesses need to be aware of is how the market is evolving. I mean, if people are looking for slightly cheaper alternatives, it's useful to ask, do I have some cheaper alternatives available? There's an awful lot of people going to the grocery store that are looking and asking, okay, I typically buy one of the high-grade pizzas in the frozen pizza section. Maybe I should aim for one of the medium-priced pizzas. So, I mean, clearly businesses need to be asking themselves, how can they offer consumer deals? We're already seeing a little bit of the shrinkage effect coming in, too, where some businesses just decide to offer slightly smaller quantities of a good at the same price rather than actually raise prices on the good. That is raising prices on a per unit basis, but that's another way that people adjust. Businesses really need to be alert that consumers may be trying to move down the quality spectrum in their purchases.
Sumner, you mentioned the Federal Reserve. Last month, they raised interest rates by 0.75%. Now they're thinking it might be raised a full 1%. Do you see that happening later this month?
It's possible. I mean, I think this news is so new, it's going to take time for the Fed to absorb it. But what we have with the Federal Reserve is they were slow to react to a rising inflation rate. They thought that the inflation rate would be really transitory, and not just the Fed. A lot of economists thought the same thing, that the inflation would peak quickly and come down. But really what happened was the war in Ukraine has upset a lot of this thinking. The war in Ukraine has raised international energy prices. It's caused disruptions in the export of food from the Ukraine, other parts of Eastern Europe. That's raised food prices. That's out of the control of the Fed. All of a sudden, when that war started, they started realizing we better take some action against inflation because the war is another force pushing up prices. So they were late to the party. I mean, what the Fed is supposed to do is take away the punch bowl that all the party goers, all the people in the economy are drinking from. They're supposed to take it away as the party gets really good, okay, and not let it get out of hand. This time they let it get a little bit out of hand. So oftentimes what the Fed does then is it tries to say, okay, we have resolve. We're gonna act really harshly and make sure that we slow the economy and that we stop inflation in its tracks. The problem with being a timid Fed earlier on was that there's always a problem with the Fed overreacting. I think what the Fed's going to do is most likely raise interest rates by another. That's short-term interest rates. Raise short-term interest rates by another point at the end of the month here. But then they're going to monitor the information closely. The good news for the Fed is that this is the best time for monitoring information. I mean, the information is out there. There's skilled people at the Fed, but the idea that we're necessarily going to have a soft landing might be a bit misplaced. We might not. A lot of it really depends upon circumstances that are out of our control in the United States and here in Hawaii. Here in Hawaii, there's little that we can do. I do think one positive advance kind of in the fight against inflation is that over time, many of the supply chain difficulties will start to be resolved. I mean, when firms can't get goods from China, they look around the world and there's other places to buy goods, such as Mexico, Vietnam, Canada, Europe, and they start to fill some of those supply chain holes. And then what we find is there's a bigger supply of goods coming out of the market. I expect to see this with new cars coming up later in the year, that as we see more chips, there's been a chip shortage that's caused the supply of new cars to be down. That's raised prices.
Sumner,
but that chip shortage.
But Lawrence has a question for you here.
Yeah, just the final
sure.
question. Given that, what's your final message for us, for consumers? Are there things that we should be holding off on purchasing, or we should purchase now because of what might come in the future?
That's the big question with inflation. Do you want to purchase now and avoid future price increases, or do you want to wait and take advantage of lower prices in the future? I do want to note that there are some prices that fell in the month of June. That's what the latest report is. Those prices include things like smartphones down by double digits, TVs down by double digits. There are a couple other big appliances, smartphones, TVs. Airfares are starting to come down too from their heights, and they're real big heights in May, but they're starting to come down. So, one of it I think is durable goods. I expect to see durable goods. A lot of the stuff we buy for our house actually come down in price as supply chain issues are resolved. Stuff like food and energy, it's a harder slog. I think for people who are doing big commutes, start looking at carpooling. Start looking at ways that you can take public transport.
Okay, Sumner, we're going to have to leave it there. But thank you so much. Yeah, Sumner Lacroix, economics professor with UHERO. Thank you so much for your insight in today's inflation numbers.
Thank you.